Welcome to the 2024 CHS Ag Industry Day in Grand Forks, North Dakota, and our live-streamed marketing roundtable. And now, here is your host, Farm Journal's Michelle Rook.
Welcome to our market roundtable here from the CHS Ag Industry Day. I'm Michelle Rook with Farm Journal, along with our panelists who are, some of them are back from last year, and we also have Allison Thompson with the Money Farm. But she's with us for the first time this year, so it's going to be a great discussion. To her right, Randy Martinson with Martinson Ag out of Fargo, North Dakota. And we also have DuWayne Bosse with Bolt Marketing out of Britton, South Dakota. So great to have you guys back here this year for CHS Ag Industry Day. All right, so I got to ask you, Randy, because you were here last year with me, things a lot different in terms of prices on grains than we were a year ago at this time, right?
Yeah, a lot different. Since summer of last year, we started to see these markets erode, and they just continued to erode and actually picked up steam once we got into the beginning of 24. It just seemed like we couldn't find a bottom, and hopefully now we've kind of searched for one and found it, and hopefully we'll start to take a little curve up. But yeah, it's been a tough road.
So when we talk about crop insurance prices being set in February, we are looking at guarantees also much lower than a year ago, right?
Yeah, a lot lower. And, we were looking in the office just to, figuring that for the most of the time you can go up a level to equal last year's coverage. Well, you can't even go up to 85 to cover the level of coverages that we had last year because of the price, how far we've eroded with most of the base prices for insurance.
So last year when you and I were here, we were talking about corn at $5.91. This year we're at what? $4.66.
$4.66,
right?
Yeah.
So we've had $1.25 drop. Soybeans have been even more than that. Almost $2?
Almost $2, and same with wheat.
Okay, so got any good news for us?
That's DuWayne's job.
Yeah, that's DuWayne's job. So, DuWayne, I'm curious, did the prices that we saw in the grains, did they fall farther than you thought they were going to fall? We have been talking about a commodity reset here for the last several months, but did it go down more than you thought?
Sadly, yes and no, and let me explain. Last summer, when this started to turn, and you could see it start to get bearish, we were bearish in our office, and I'm proud of that. You sell the board hard, and I had circles drawn on the chart down to 430, so I'm really proud of that. But guess what happened to me, and this is me being honest. In October, everyone kind of remember what the market did? We had that bit of a head fake from 5 to 520, and that made me go, wow, it just must not be as bad as I thought. Maybe the crop isn't as large. I got out of short positions and then watched it go down to where my circle was on the chart. So yes and no, Michelle. I saw it going down here, but did I play it right the whole way? Absolutely not.
So Allison, do you think maybe there was a little bit of hope in the market because we had such dry conditions last year, over 50% of the Corn Belt, that we're going to have a rally at some point? The market's going to have to recognize that we have a smaller crop. Was that part of the reason why things fell farther than we thought?
Yeah, well, I think everybody, around here too, and through the Corn Belt, were pleasantly surprised with yields across the board last year. Despite the growing season that we received, I think during the summer when prices were rallying, we were debating doing more sales, but everybody was very cautious on adding too many sales too soon because we didn't know what we were going to produce. And they've been there before where you start doing cash contracts, and if you can't fulfill them, that's not a good place to be. So we can't blame you for not doing that in our office too, but now we have to move forward. We got the confirmation from the USDA, the yields were there, the crop is big, our ending stocks look pretty burdensome. So all that put together, no issues in South America, they kind of went to the wayside, and prices have just continued to downfall.
Yeah, South America is a issue we're going to get into a little bit more and why the market hasn't reacted to that. But not to belabor it, but part of the reason that we've seen prices also go lower than we thought is the fund position. They are record short now, or were at least, in corn, soybeans, wheat, everything, right? And how unusual is that for this time of year, DuWayne?
Well, I mean, they'll go short, especially when we have a larger crop, and maybe they saw that before we did. Maybe they just outguessed it. What I would like to point out, though, and this is, we'll try to get it a little bit more bullish and friendly, is that the managed money on the corn side, they're record short, like you said, right? I've never seen them record short or short the market for the entire calendar year.
Okay.
So what I mean, at some point in time, they get out of those positions. And if you're short 330,000 contracts and want to get out, that should be a substantial rally. Now, all we got to do is figure out a bullish story to get them out, and I'll let Randy handle that.
So they did cover some of that short position in the corn market as of last week's Commitment of Traders report, but they went even more short in the beans, right? So now they're record short in beans too.
Yep, record short beans. They've done everything, and you know, soybeans. That was the last market to go down and make that new contract low, and it felt like it just had to do that. And now we're seeing a little bit of recovery here.
Gotcha. So the other thing that played into this, we got to the end of the month and we had a lot of farmers selling. So let's talk about how much more crop do we have out there in storage that hasn't been sold by farmers than we would have in a normal year? Is that the other thing that has kind of put a lid on prices?
Right. Well, do you want me to answer my farm? How much? Because there's way too much on my farm.
And,
okay.
and just about every farmer is going to agree with you on that. Way too much that has been unsold, right?
Yeah. No, I think you're right, Michelle. The three of us were talking earlier, you know, last year, there wasn't a lot of pre-harvest sales because one, the price was going down. And secondly, we had money. We've had some good years. We had the cash. It wasn't a panic sell. And now, you know how hard it is to sell at the lows? Unbelievably hard. You know, we're always optimistic, otherwise we wouldn't be farming, right? So to answer your question, yes, there's a lot of crop out there yet to be sold. And that's what's also going to keep a limit on this market when we do rally. You know, I talked about those funds exiting those short positions. It sounds great, but you rally 30 cents, 20 cents even from here, boy, farmer selling is going to increase a lot too.
And we've already seen that. And then we had a lot of basis fixed contracts and that had to be executed or rolled at the end of March. So, or the end of February for March, when we went into delivery period on those March contracts. And so that also put pressure on. Are we done with that? Because every time we get a new contract month that comes up, we have this same problem. We did in December, didn't we, Allison?
Yeah, and the thing that we were definitely watching with these contracts too was, well, everybody was curious, what the heck do we do with them? But we had to watch at what the carry was doing as well, and it didn't make sense to carry it out into the summer or into further deferred contracts. So that's what got a lot of grain moving now, or in the last couple weeks, is it just added to your cost. If you had basis contracts, you were adding the carry on top of it, and it doesn't look very pretty. So I think it did get a lot of grain moved. Now going forward, you know, I think a lot of guys are going to be eyeing the July contracts, especially around here. We were talking earlier too about road restrictions and all kinds of that kind of fun stuff already being talked about because of the spring we have. So we'll see what happens going forward. But again, I think a lot of guys did get moved out, or they're starting to look at those further deferred contracts right before we get into the new crop.
Yeah. The market was essentially saying, we don't need your grain now, though. That's what that carry in the market was. And, you know, did many producers, were they able to take advantage of that carry at all?
No.
Unfortunately. Yeah, that's part of the problem too. Okay, so we talk about the fund community being so short. You said we need a catalyst to get them out of that short position. Is that the only hope that we have for a rally in this market, in this grain market? Each of you can answer that question.
Yeah. Well, the funds, their only goal is to make money. And I think we have to remember that they are strictly trend followers. So they're following the trend. They jumped on the lower trend in grains and pushed it a lot farther than I think a lot of us would have liked to have seen, but that's what they do. So when they think they've pulled enough money out of this thing, grains are cheap enough, things like that, they'll look for the next trend. So honestly, I've been watching outside markets. If you want a bullish market, you got to look at those or soft commodities. But we've seen a lot of buying there. Will that shift? There could definitely be a downturn there. We could see money movement there. Inflation's another thing with outside markets we need to keep an eye on too, which could be a bullish factor in the year ahead too for grains. It's used as a hedge against inflation. It kept us at really good prices for the past few years. And once that started easing, our grain markets fell down as well. So there are definitely moving pieces outside of just necessarily our grain markets that could have a positive impact this year.
Yeah, and when you talk about inflation, of course, the Fed has been raising interest rates to try to curb inflation and try to get down to 2%. But they are going to have a tough road to hoe here this year because it looks like, are there signs inflation is starting to come back? Maybe?
Yeah, there definitely is a mixed bag of economic reports. And honestly, you could find whatever you're looking for out there to support your narrative. And the outside markets, the media can find what they're looking for. And that's what they're following. And right now it's bullish. Everybody wants to run on it. Everyone's jumping on the bandwagon. Eventually that bandwagon is going to hit a bump. So eventually it is going to turn, and we're getting record highs. I think the S&P has hit a new all-time record like 15 times just since the start of 2024. So, eventually it's going to turn. And now with the sizable rally we have, even just a 5% pullback is a large amount. So, when these things start turning, it's definitely going to shift their outlook.
Yeah, because money flow is a big part of this. When I travel or when I talk to producers, they're like, oh, they hate it when I talk about money flow and the influence that it has on the market. But that goes to your point, Allison, and it's something, DuWayne, as a farmer, I know you can see both sides of it because you're a farmer, but you're also, a commodity analyst. So money flow is a big part of this. And what percentage of the trade is now algorithm traders?
It's about 95%.
Okay. So that's why we talk about money flow with you guys, is because it has a huge impact on our market.
Oh, absolutely. That and spreads. The cattle market is nothing but spreads, really, for the most part. Yeah, I get a lot of phone calls of why did the market do this? Why did it do that? Like today it was up strong, right? And everyone wants to know a reason why. A lot of it's mostly technical than everything. That's why we look at the 20-day moving averages, things like that. And on those funds, if you don't mind, I'll back up. I mean, Allison's right. They're so heavily short the market. And I tried to make a bullish twist and say that they never have stayed short for an entire marketing year or calendar year. This might be the one time they could, though, because of the carry in the market. Yeah, there's a carry in the market. They could stay short. They could roll out to July, let that carry come down, and then roll again. I'm just saying they could. I don't think they will.
Let's hope they don't.
Yeah, that sounds horrible. Let's not talk. Let's go to the next question.
Yeah, I'll argue with you on that one. And especially mainly because, we've beaten this market down so bad and taken so much premium out of it. There is zero premium in the market right now. And we're going into springtime where, the biggest uncertainties are still ahead of us. We don't know where our acres are going to fall. We don't know what Mother Nature is going to do for us for production. We don't know, there's just too many unknowns. So the market will have to bring in, I think, some sort of a premium. Now, I'm not saying that by the time we get in markets do not bottom in the spring. You always see some sort of a rally. So I would expect that by, April, middle of April, corn might be running its course if we're getting planting going good and growing conditions are good. Soybeans are going to start a little later because of South America and Brazil having the exports, but I would expect by, May we'll see a little bit of push. By June, soybeans might be running its course. Wheat, at this point, it's a specialty crop.
Well, you would think the funds would not want to be this short, like you say, going into the planting season, right?
Yeah, and the last time, you've probably heard it, everybody's been comparing the fund positions to the last time they were record short for corn and soybeans, and that was in 2019. So, and that was April, May timeframe, so right going into planting, and then we got a weather scare and it quickly changed. We only held that record for a week. So if they're gonna make a new record short here, which obviously they have, maybe wheat will try it too, who knows? But if they end up doing that, I do expect it to be short-lived. Again, they're trend followers, quick money and they're out, so I do think we'll see that.
To get a rally, we first have to get the markets to quit going down. Okay, we had new contract lows in Chicago wheat again today, Kansas City wheat yesterday. We scored them in soybeans last week, the week before corn. Do you think the lows are behind us? I'll let you each answer that question. We are in a transition where we're trying to form a low even? DuWayne, you want to go first?
Yeah, I'll go for it. Corn and soybeans, yes, I think we did make a low. And I feel like I can say that fairly confidently because of a lot of what you two just said. Funds are record short, and do you want to be short at the lows going into a growing season? So that's a powder keg that's very dry and could really explode there. Yeah, I didn't say wheat's made a low yet. Sorry. Come up to North Dakota, you should be bullish wheat. You'll be more popular. But the reason I'm questioning wheat, if it's made a low or not, it isn't our problem. Our domestic supply is tight here, basically, compared to the previous years. The problem is the global market and the global price. Russia keeps dropping their price. Ukraine is getting their wheat out better than they did before the war. Once the world price hits a low, then we can find a low. But I don't think the funds really want to be short wheat anymore to that extent.
Yeah. And low end?
I think so. I'm concerned about wheat too a little bit, but for the fact that with us going into our spring and we're looking at spring wheat starting to go into the ground, it's not going to go in the ground. I mean, guys aren't going to look at planting a lot of spring wheat where the markets are at. And so I do think that that market's got to try to find a bottom where it's going to lose a lot of acres. I think Farm Futures put an estimate out in February that said we're going to lose 2 million acres, 2.1 or 2.2 million acres of spring wheat this year. Well, that takes us down below 9 million acres, and we've never been that low in spring wheat in history. So that's reality if this market doesn't start to show a little bit of life. So the problem, I think, to DuWayne's point, you got Paris milling wheat hitting new lows just about every day.
Just about every day.
And that is putting a lot of pressure in on the world market right now.
And Russia just sold below $200 a ton here today or yesterday?
And announced that they might have 2 million more metric ton that they can put into the export market. So, and at some point, I don't know how Russia can continue to have a 90 million metric ton plus crop year after year after year. So
if you believe it.
Well, yeah. I think, some of it's being donated by Ukraine, but.
Donated is maybe the wrong word, but.
So I do think that is part of the problem that, they've just continued to be able to find the bushels to export, and they are dropping the price just so they can cause hurt to the U.S.
Yeah, absolutely. Do you think the lows in? We'll leave wheat out of it because that one's the jury's still out on wheat, I think, maybe.
Well, actually, I'm probably the most bullish here on wheat just because the market is showing us some interesting developments. Not only is it making new lows, okay, that's not good, but it's getting inverted. Chicago and KC wheat are inverted markets, and Minneapolis is right on the cusp. So that is bullish for grains going forward. So something's got to give. I've also heard from a few elevators that are actually starting to move some trains of spring wheat, offering some good basis opportunities out there. I've talked with some millers too who are seeking good quality spring wheat around the area. The last couple of years, winter wheats actually helped them because it's been cheap and they've had good protein. And now the last couple of years, they've done pretty well. So now it's coming back to the spring wheat market for that protein wheat. So I do think that we're very close. If we haven't printed the low in the wheat markets, I'm probably a little bit more bullish on the wheat side going forward. But yeah, I think there's some other things going on here, and the market's trying to give us some look at some positives here that could definitely turn the boat pretty quickly.
All right, so you said one of the catalysts that could get the funds out would be something with our planting season, putting some risk or weather premium into the market. what about the South American crop? Let's get into that one because we had our hopes pinned on the idea that the crop was getting smaller in Brazil. So far, USDA just doesn't want to go where the private estimates are on soybeans or corn for that matter. Is that the next thing that maybe could trigger a rally in this market or not? You guys have sources down in South America. What are they telling you?
Well, the guys I talked to down there 2 weeks ago, when it was closer to a month ago, said that it was a life-changing event. He farms in the region of Pioneer, and he said that I'm not meaning that in a good way. He said it's not very good. They're expecting on their farm that they're looking at 40% less yield this year than last year. Well, that's a pretty big drop. And when you look at it, as far as most of the region, except the Northeast, most are saying it's 15 to 20% lower yields than the previous year. So what we're seeing, well, actually, we're not hearing anything out of Brazil. They're not saying anything, and that's kind of leads you to believe that the crop isn't as good as what they were hoping it would be. Why USDA is still at 156 when everybody else is sitting at sub 145 or 140? That's,
why are they slow playing it so much?
Yeah, it's government. Yeah,
you need to say that in the microphone. It's the government. That's what Allison said.
I think a lot of it is that, and you look at the corn, they're not planting as much corn because the economics aren't there. So they're looking at their lower corn acres. So when it's all said and done, I think Brazil is going to see somewhere between a 15 to 20% lower production this year than last year, which is going to tighten up stocks quite a bit.
I did a lot of interviews and asked a lot of people as we were going through the last couple of months because, we held pretty good premium in the market until it started to rain in Brazil, remember? Because it was so darn dry there. And then, end of December, end of January, we started to get those rains and we started to take premium out of the market. But my question was it too late to help out the crop? And a lot of people said, yeah, it was. So I said, how low does the crop have to get in Brazil for the market to care, for it to make a difference? Because if you add Argentina's increased production, you're still going to have a record crop down there, aren't you? Is that why we can't rally this market?
You're smart, Michelle. It makes it tougher for us up here when you ask those good questions. But you're right. With Argentina, remember, they had a half of a crop last year. With Argentina, even if you put last 2 years, with the increase in Argentina and even a decrease in Brazil, you're probably still really close to 200 million metric ton, which is still above last year's. The question is like what Randy's saying. I don't know if Brazil's even at the 150 anymore. Let me say probably the most important thing to watch down there, and to answer your question, what is important? What does it take? The basis in Brazil. And Michelle and I were doing interviews about a month ago, and we were talking about how wide it was between us and Brazil. They were so much
like
cheaper.
$2.
Yeah, like $2. That has gone crazy narrow all of a sudden. And that was one of the news stories overnight is Brazil's basis got tighter. Well, what happens if your basis is getting tighter during harvest? Farmers aren't selling. And why are they maybe not selling? Because what Randy said, the crop might not be there. Now, to answer your question, when does it matter? When China comes back and buys from us. That's when it matters.
And that's the problem. China is buying from Brazil. There's a lot of reasons that China is not buying from us. Trade tensions.
And it's not because of price. It's, logistics. There's a bunch of different things that go into play there. But, with Brazil there too, the production is going to be down quite a bit. And I do think that, Argentina is seeing a better production this year, but they're two different sources. Two different purposes for their crop. Brazil raises beans to export the whole bean, whereas Argentina raises soybeans to crush. And they export soybean meal and soybean oil because it's the export taxes.
But the meal market has also lost over $100 the last month or so. And
I think part of that goes back to even to the U.S. because we're seeing more crush, we're seeing more meal, it's getting to become a little more friendly as far as the animal agriculture side because it's cheapening up the cost of there. But we do have a lot of meal that has to move through the system because of the increase in crushes.
But there is anticipation Argentina is going to have a much bigger crop, and so that has also depressed the meal market, has it not?
Oh, it has. The trouble is, will they sell? Will they sell? Because their economy is so poor, and right now they'd rather have the beans to trade for product than they would to sell them because the Argentine peso is worthless. I mean, their inflation is what, 140%. Well, we think 6% is bad.
Yeah,
You
right.
don't think of 140%, so, yeah, I mean, the only way they can make it is to hold the asset and then trade it for goods, so.
So the other discussion that has been, maybe the last couple of weeks is that China is buying corn off the PNW. They earlier bought some SRW wheat from us, which they canceled part of it, that showed up this morning, but that they're building their reserves, that they like to buy U.S. products, especially beans, because they store better. Is that really a story? I mean, is it really true? Are they going to build their reserves? And is that a possibility? Eventually they will come back to the United States at some point or not?
Well, they've been releasing quite a bit of reserves over the last year, and we've known that they've done that, and they're just trying to help out their economy as well. But yeah, typically if they're getting usable soybeans that they want to use right away, they do source it from Brazil, and their beans are just dirtier coming from there. And it does affect their storable quality. They're kind of oily and they look dirty is honestly what it is. So that is very true. And ours usually do go into storage because they're able to store them better. And that just kind of goes back to what Brazil normally does too. Normally farmers don't hold on to a lot of grain for very long because of their climate and the condition of the beans and how storable they are. And they're not really. So to see them holding on now, I think it's a short-term deal. I think they're going to be forced to make decisions. Last year, they had to get it moved. They didn't have storage capacity for it all, and we saw it just hit the global market, and it flooded it. And now it's starting to back off. So if their pipeline is thinner, we should be seeing it here shortly.
Is the other problem that they haven't been buying beans, though, that their economy is slower and so they just haven't, the demand has been down?
They've been decreasing their herd size, their hog herd size. So yeah, they probably have less feedstock need. But to Allison's point, they did use a lot of reserves and they're building them all back up right now. The problem is they're not buying them from us like I'd like them to be. But
And a lot of the beans they're buying now is still going into to feed right now. And then they're part of their, also when they decrease their hog herd, they also decrease the amount of protein they're feeding their hog herd.
Right.
So they're using less soybeans. So they're not using the meal. So,
But they're purposely doing that. I mean,
Yes.
they do not want to put as much meal in their rations now. They've already announced that, have they not?
they have, they're trying to cheapen up their feed product is what they're trying to do. And yeah, that helps bring in some wheat. That helps, and sorghum is another crop. They've been buying sorghum aggressively from the US. They just haven't been buying the corn or the soybeans. And I think once we get to that April, May timeframe, we'll see China, I think, come back in and buy the beans from the US that will go into their reserves. Part of the trouble is they wanted to drop their price, and that's why they brought a lot of their soybeans or their crop out of reserves, is to lower the price in
And it
country.
has come down, all their commodities.
they're
have
really good at
come
that.
down.
Really good at that. Yep.
And they had a better corn crop this year, so that also is slowing down the need to import a lot of corn.
I think they'll import this summer, early
Oh, I
summer.
think so
I
too.
think that's when it'll hit the corn market. When you guys are all busy planting, China will come in and start buying corn, and we'll probably see a sizable rally. But I think they're going to wait and see how South America's season kind of goes. But they start hitting a dry season, China will step in really big.
If China does come back in and start buying beans from us when they normally wouldn't be, like say this spring, and start buying our corn, there's your catalyst for the funds getting out of those short positions in a heck of a hurry, right?
You would think so. Then it would feel like deja vu. Like, remember in 2020, and everybody was so bearish. We were going to have 3 billion bushel ending stocks, and then we were going to plant 95 million acres of corn, and then all that started to erode. And then China came in and started buying that fall, and it was just kind of flew under the radar for everybody, didn't it? So.
This is already a lot more bullish than I thought it was going to be. So this is great.
Oh, yeah. Well, we can make up any story we want, right? Right. What about Brazil's second crop corn? Okay, they're planting right now. I know there was concerns that with the drought and the low prices and the margins that they had, that maybe they weren't going to plant as much second crop corn down there. What are you guys hearing about that?
Well, my contacts down there, for one, we do know that they ended up planting a lot of their soybean crop late, a lot later than they normally would, and they opened up the planting season early because they were such good dry conditions to get yield. So their wet season ended early, they planted early, and then there was like a large break. And then they started planting again. It was late November, early December. And then a lot of those beans that got planted early had to get replanted. So there was replanting going on, and there was also crop shifting going on. Some cotton ended up getting planted, some corn ended up getting planted, and that only pushes back the beans that were planted or replanted are being pushed back later. And that's why we're just finally getting into the heart of their harvest here on soybeans. And we should see it pick up more as we get into the month of March, but it pushes back the planting of a lot of that second crop or would be second crop acres. So I think there's probably going to be less second crop corn acres being planted. And the next question is going to be is when their dry season is going to start on what gets planted. And I think there's a lot of concern that it could come earlier or the crop's just going to get pushed into it, especially, and we know that end finishing weather is very important for corn. So we're just might be on a waiting game to actually know how that turns out yet, but we are starting to hear concerns about it for sure entering the marketplace.
It's already been kind of, widely known. There's been a lot of private estimates that have already pulled that second crop corn down in Brazil. And in fact, what CONAB, I wrote down here, 113.7 million metric tons was their last estimate, which is quite a bit lower than last year, isn't it?
It
So
was
is
like
that gonna be
126 last year.
126 last year? Okay. USDA is still well above that. Will USDA start coming down on that estimate here pretty soon? Will we see it in the WASDE at all tomorrow, or are they gonna disappoint us again?
They're going to disappoint us on corn, because they're still planting the crop and we still just don't
Too
know.
early.
It's too early. Exactly. It's too early. But, from what I'm hearing from the guys there, they're saying it's at least a 6 to 7% decrease in acres that's being planted. Now their planting pace is ahead of last year. I think they're like 71% planted somewhere in that area, but it's mainly because they're putting less acres. So, and it's been decent weather to get it planted. Now, to Allison's point, what's really going to be important is when the crop starts to pollinate, which some of the early planting and stuff is right now, and it's a little bit warmer, a little drier again. So I do think that it's going to be a lot less production there than what's being led on right now.
So do you think that we are gonna pick up some corn export business because of
Yes.
that down the line or not?
Yeah, I do.
China, is that where we're gonna get that business, is them?
Right now you look at what CONAB has put out in their last report, they cut their exports by what 30 or 20 to 30 million metric ton from last year. That's close to 750 million bushels. Well, China's got a little better crop, so they don't have to import as much. Argentina will make up some of it, but there's still likely going to be close to 200 million bushels that has to come from another source.
Ukraine is right now, there's a lot of Ukraine corn going into China though, right?
There is a lot that is starting to now recently there is going through the corridor and a lot of corn that has been making it in there into China.
And of course, they're going in at a lower price than the United States.
Right now it is, yes. It's not too much off, but the problem is it's not that our corn price is too high, it's our logistics are too high. So if we had logistics, if we had the Panama Canal that could hold, full barges and ship through, we would be competitive. But since we only can push a 2/3 to 3/4 of a barge through the Panama Canal, that's raising our costs.
And the issues with the Red Sea as well have just raised shipping rates across the globe, no matter where you're shipping through. Insurance costs, shipping costs, time, all of those things are affecting that export program.
Yeah, so the FOB price is quite a bit higher.
Yes.
Yeah, and it's not gonna go down for a little while here. It's not the Panama Canal situation, the drought there, I think they're only pushing through, 24 ships a day? Is that right? Which is substantially lower than normal.
Yeah, it was over 30, I believe. It was like 36.
Was what I reported on at one point. All right, so you're telling me that our best hopes for a rally are either a crop problem in the northern or the southern hemisphere, right?
Yeah, right. But almost every year you do have a weather scare. Remember, we don't have to end up with a disaster. We just need the market to think we've got problems for a while.
All right,
whether
drought
it's
monitor did look pretty much like we're seeing expanding drought here this morning. But after a year, like I said, when you have 50% of the corn belt in drought and you still kick out a record over 177 bushel per acre yield on corn, does the market believe it at this point? Or when does it's too early to be talking about
It's
it,
too
right?
early. You got to get into April, May before that drought gets to become a real concern. So it's something to continue to watch, and it's, if it keeps building, it's something we have to pay attention to, but it's not going to be the market mover in the short.
It could be like the boy who cried wolf. I used that analogy with you earlier because we've gone through 2 years of drought and still had a really decent crop and really good yields. Are they gonna believe that for a third year? That's the $1,000,000 question. I think at some point we will get opportunities, but what the crop actually ends up being at the end of the year is probably gonna be the most important, like we found out this year.
I have also wondered if that is part of the reason why the trade has not rallied or the grain markets have not rallied more on the Brazil drought news because the same thing happened in the United States.
Yes, I believe that. I do think that we still had hindsight in our minds, and the trade does too, of how it turned out. The conditions down there are so much different than they are here. Last year with the drought, we actually did have mild temperatures for the most part across the Midwest. Down there, they're dealing with excessive heat, triple-digit heat. And on red soil on top of it just makes it so much hotter. So they are dealing with different circumstances. Now this year, if we end up being dry, I think it will be worth watching not only timely rains, but if we have triple digit heat, those timely rains are going to be even more important. So there's always a possibility it could be different.
Yeah, for those of you that have never been in Brazil, their soil is such, and I've traveled there a couple of times. You have to have rain almost every other day to, keep things going when it gets pretty hot down there. So, drought is a bigger deal, I think, with their type of soil than it is here. The other thing, let's talk a little bit about the acreage mix coming up here. Of course, the USDA Ag Outlook Forum, which we pointed out last year, is all theoreticals. But talking about maybe 4 million acres less soybeans, almost 3.5 million acres more corn or less corn, right? Or did I say that wrong? I said it backwards.
Yeah.
4 million acres less soybeans.
More
soybeans. Yeah, I said it wrong twice. Other way.
You'll catch on.
Yeah, I'll catch on. I'm a little slow. I'm a South Dakota girl, so I'm not official yet. Yeah. So they're talking about the shift, more soybeans, less corn acres. What are you going to see up here in this area, do you think? And Randy, you pretty much nailed it last year, so I'm going to let you go for it.
Oh boy. Right now, I guess I think as a nation, we're going to see less corn acres, more soybeans. If you look up here in the Northern Plains, I think we're going to see more canola, especially to the western regions. We're going to see less barley. We're going to see less sunflowers. Even though they do have some contracts out at $20, I don't think guys will pick it up because of where the market is right now. We're going to see more edible beans. Dry edible beans had big contracts out, guys. There was a lot of people that picked those contracts up. I do expect that we're going to see less wheat acres. I don't think it's going to be 2 million less. I would be thinking more like 1 million less wheat acres. Soybeans, like I said, will increase. And I think corn is going to decrease in the state of North Dakota as a whole. But if you look at splitting the state in half, or 94, Highway 94, north of there is going to be less corn acres. South of there is going to be higher corn acres. And there's going to be probably more corn acres out in western North Dakota because they had a huge crop of corn this year, and they're going to try to capture that again.
You've been watching the ratios. You not only do corn soybean ratio, but you do other ratios like spring wheat, soybean ratios and whatnot. What are you seeing there, Allison?
Yeah, so prices have actually been acting pretty interestingly. Another ratio that I have been using the past couple of years has been a spring wheat to soybean ratio. And we know we're the swing acres up here. That's kind of what we've been known for. So it is something that I've started to watch. And usually that's about a 1.6 is about equal. And so over the past couple of years, it's been a no-brainer. Soybeans have beaten out wheat all the time, but actually over the, since the beginning of the year, we've actually started to see it favor spring wheat. That sounds awful because we're looking at awful wheat prices, but given the comparison, it is actually starting to compete. So, and we all know wheat has somewhere to go if they want to get extra acres in. Obviously, spring weather plays a big part in it too on what actually goes in. But I think prices, if we do see a substantial rally, it will be something to watch for extra acres getting in. I know anybody who has spring wheat's definitely watching that price too.
What about in South Dakota? I have talked to a lot of the South Dakota farmers that have said, yeah, we're planting more beans this year because the price is just better.
Yeah, before the forum, I guess I was leaning the same way. I thought basically just because of the math worked, you could lose 4 million acres of corn, you could gain 4 million acres of beans, and your ending stocks are just fine for both. So I think that makes sense. But the biggest thing I know on my farm, and I think in most farms in the Dakotas, it's the spring weather. And right now, it looks great. So that makes me think that you could have a little bit more spring wheat, not more than last year, but less of a fall than people are saying. I think spring wheat could go in. I think corn acres, if it's good going, guys will plant that extra 80 or that other quarter, and then all of a sudden we don't get that 4 million acre swing. I just heard yesterday one guy in central South Dakota planted 4,000 acres of spring wheat already. So it's already going.
So 91 million acres is what USDA threw out at the Ag Outlook Forum. Is that reasonable for corn?
That'd be a million less.
You'd be a million less. What about you, Allison?
I wouldn't be surprised if it comes in close to that. I've talked to a lot of guys who, like you said, they're definitely spoiled with really good yields the last couple of years, and they want it. And given where prices are, you want to make up for it with bushels. That's always the goal. But if you go back to an average yield around here, so that's what 20, 30, sometimes bushels an acre off of what they got the last couple years. You take a dollar off the price, it's not quite as rosy. But I think it's something that you definitely need to work on your books for. Make sure you know what your break evens are, and make sure you know the risk there, because it doesn't last forever. If anything, the last couple of months have definitely humbled us in that respect.
No doubt. But the mentality is, like you say, bushel up. If we get into the field early, maybe you get a few more acres of corn, though, don't you think? I mean, gosh.
I'll average us out. We were, it's about the same, neutral, -1. I'll go +1. And then it's just about it. I don't know.
You're at 92 then.
Probably am, and I was at 91 before, but I just feel like this weather like this, I think guys will push it a little bit. But fertilizer is also a thing.
It is, but guys can plant soybeans early too.
I know everyone's doing that more, aren't they? Yeah,
They're planting beans before corn now.
Yeah.
Yep, I got a guy in southern Minnesota who's got
some
50
in
acres of
now.
beans. Yep. Well, just fine, I'm sure.
87.5 million acres of beans. That's, again, out of the USDA forum. That's up from last year, like you said, the 4 million. So is that enough with all of the processing that we have coming online here or not?
No.
Yeah, I think soybeans have the bullish story, don't
Yeah, I think so. Yeah. As long as we can keep the government subsidies in for the renewable, the renewable fuel side or the biofuel side, soybeans really do have the story, or the oil seeds, and right now, if we stopped importing a lot of the restaurant oil and the canola oil, we have an expansion of
I think even palm oil, aren't we?
even palm oil. I mean, we're importing a lot of oils to fill the void because we don't have enough soybean oil to do it. We could expand soybean acres quite a bit.
Then why is soybean oil still under 50 cents? This is what I want to know. If the demand is so good, why?
Right now, when you look at soybean oil, we used to be a huge exporter of soybean oil. We do not export any soybean oil anymore. All of it is used domestically into the crush side of things. I think part of it is because last year, everybody rushed to produce renewable diesel fuel and the renewable fuels, and they overproduced what the subsidy was being paid on. Now they're pulling back a little bit to only produce what is available for subsidy.
And when you say subsidy, but also what is also part of the renewable fuel standard and
Right.
the RVO levels.
Right.
Because they flatlined it basically for this year.
Yep. And they aren't going to
Hey, that is.
Yes, and they're not willing to overproduce because they're not going to get that government subsidy on the part they overproduce.
And some people always come back and say, well, we have the low carbon fuel market in California. We've got it in Washington and some of these places. So doesn't that trump, the fact that we have the renewable fuel standards stalled out here on biomass-based diesel? But we need both, don't we?
We need both, and the plants are still working off of the subsidies to help, keep them going. So, I mean, they're, right now, about 60% of the biofuels that we produce or the renewable diesel is already going into California, into the West Coast, you might say. The other 40% is actually domestic, spread out amongst the rest of the states.
What about specialty crops? What do you think there? I've heard some guys saying edible beans are good this year as far as contracted crop, pretty good price. What else?
Edible beans are good. They're going to see an increase. Barley's going to see a decrease because we're already holding too much. Both the maltsters and the pet food are making guys store beans or store barley longer. So those acres are going to drop. Canola acres are going to increase in the U.S. because Canada's maxed their acres. So with their renewable diesel side of things, they're going to need to import canola from the U.S. to make it work. So I would look for canola acres to increase. Sunflower acres are going to decrease because they're not part of the renewable, the biofuels industry. They decided not to participate in it, so they haven't filed to be able to get the subsidies. Canola oil has, and that's going to help keep the canola oil. So, so yeah, I think some of the minor crops are going to see some increases. Some are going to see some decreases.
Where do we need to buy acres, or where do you think we'll see some price movements to buy acres? Cotton has already started it.
Huge. Yeah, cotton is really huge trying to buy acres, and they're going to get some corn acres away from down in the south. I actually think soybeans need to buy acres, and I think spring wheat needs to buy acres.
What do you think, Allison?
Yeah, I think spring wheat needs to buy acres as well. Cotton's been phenomenal one to watch, but they have some dry areas, drought areas. They're picking up on the weather thing too. So I just think if this El Nino, like Daryl was saying, does stick around longer than it's expected, or just gets pushed back like we've seen all winter, I just have a feeling we could definitely see that come into play as well.
Your thoughts, DuWayne?
I think corn needs to give up 4 million acres. That's my biggest.
We have acres to lose for corn, don't we?
We do. It's maybe not as much as an acreage battle this year as who has to take them. And you get up in this area, prevent plant is something that none of us like, but a lot of times we have to deal with. And if we don't have a wet spring, knock on wood, I hope we don't, then we have more acres available there too.
No doubt. What about some of the yield forecasts? Let's talk about that. So the Ag Outlook Forum, we came out with 181 bushel per acre corn yield. I mean, is that really realistic? Anybody want to bite on that one?
It's trend line. That's what it is.
We're all numbers people, and I think you got to start out with a trend line. In fact, I'll even go one further. I don't think anyone has got good enough arms to hit us from here, but with anything that we're throwing. But aren't we really due for above trend line one time? Like,
bite your tongue.
I know.
No.
But if the acres are down, that means they're probably down in the fringe areas. We actually have really good weather. I'll say protect and do your risk management just in case we get a 185. I mean, it's possible. I hope it doesn't happen, but we're due for something like that.
And 52 bushel per acre soybean yield is what they came up with. Is that realistic at this point? That seems more doable to me, especially after last year.
50.
The only thing is if we do transition to La Nina, that should be drier later in the summer, right? And if you're there again, if you're increasing acres of soybeans, that probably increases in the fringe areas. And I hate that we're called the fringe areas, but they're far off. But so I would go just a little bit low. I am right now on soybeans, but I'm the crazy one that says corn could go to 185 too.
That's not very consistent.
No, yeah, isn't that nice? I'm hedging my bets. I might get invited next year.
Yeah, I guess I don't think we can get those yields. I think it'd be it's too much of a stretch, especially, even though it's early to look at the drought monitor map, we've got too many concernable areas right now that it would take almost perfect weather going forward to be able to get to those type of yields.
Iowa's dry, aren't they? Yeah.
Iowa was really dry, especially, the northern half into the eastern half.
We're even looking at a little bit higher acreage or higher yield on wheat though for this coming year. We have seen a big improvement in the ratings for winter wheat compared to a year ago. So that's going to be a little bit of a headwind, right?
But they dropped the last 2
Yeah,
weeks.
because of the fires, the
Yeah.
wildfires.
Yeah, some, Kansas dropped pretty good, Oklahoma dropped, and Texas was because of the wildfires, but, the last 2 weeks, so and we're only seeing Texas, Oklahoma, and Kansas right now. We're not seeing the rest of the region.
And it's really warm there too. I mean, a lot of that wheat has to have broken dormancy, right?
Yes.
Yes.
Just walk right over the top
Yes,
of Randy. Come on.
Yeah. No, actually, my counterpart, he actually traveled through some winter wheat areas just last week, and there are a lot of green fields. And he said it does actually look really good, but it's also kind of early. So, I know what looks good, but you can't, it runs the risk when it's green this early too of something else happening to the winter wheat crop. And yeah, conditions are better than they have been the last couple of years, but actually historically they're still kind of crappy. They're not that great. So all said and done, I guess we'll see what happens. And again, we wait for official USDA condition ratings till April. So we still have some time yet too.
Let's also throw one other, wrinkle into that and look at where the price of cattle are. Look at where the price of wheat is. There's going to be a lot of guys that are graze out that winter wheat. They're going to get cattle out there.
Yeah.
That does make a lot of sense. So, I was at Commodity Classic last week, and I think the main theme I heard from everybody was basically we did not sell enough. We did not sell early enough, that sort of thing. So we do have some old crop left to price, but how much are you guys doing in terms of new crop pricing right now? And are you, at what level will you look at starting to make some sales? What price level do you think?
I guess I'm not doing any at this level. Like everyone else, it's the wrong time of year. I mean, I think we seasonally usually like to make a low here. Funds are record short, and any weather scare, I think we get props. For East corn, I think I had written down like 485 and higher. Start aggressively selling there. The old crop, you get a pop in May to 450, which now isn't that far away. I would sell the carry out to July, around that. Well, I would hope to be 470. A lot of that old crop go. So that's the numbers I'm throwing out there, I guess. And on that old crop, I'd really say don't be the last one holding it. The basis has gotten a little bit better now, load limits, things like that. But I wouldn't want to be holding my corn late August, that's for sure, because I think there'll still be corn left. I'm afraid.
Corn, you didn't mention, where's your price target on beans here?
Beans, I'm more bullish. I think we've got upside. I really do. I can't remember my prices. I know they're 12 and up.
Okay.
I'm holding that long, but now, of course, remember, typical broker. If we don't get there, I can change my mind in a heck of a hurry and hit the sell button
Right.
fairly
What
hard,
about
too.
you, Randy?
I guess I've become a turtle. I just pulled my head in the shell and just waiting. So, yeah, I think that, we've got to see some movement in this market. I'm looking for a 50-cent pop and then start selling.
That in everything?
Everything.
Corn, beans, and wheat.
Yep, corn, beans, wheat. Yeah.
Yeah, I think there'll be aggressive selling on a sizable rally. But we also know, you get greedy at the top, we're going to get greedy on any rally after what we've gotten through too. So I've been actually recommending courage calls, cheap July calls, just above the money. So that way, if we do get a rally, make sure you're selling it and you're still long paper on the board. That I think is very important, just to make sure you're encouraging some aggressive sales and getting through those will go off the board at the end of June. So you're getting most of a spring weather market as well.
I love that idea, Allison. That's smart. So you buy a call out there, give you the courage to sell when it rallies, when you want to do the cancel with close order, right?
Hence, courage call.
Courage call.
I
Exactly.
like that.
And you can do that on new crop too. We started to do that, use the short dated new crop ones, buy a courage call, I won't pick a price. That way, when it gets up there, you can make the cash sale and not be worried about, do I have the crop or not, which we heard a lot of that last year.
All great advice and great topics that we've covered, and it's almost an hour is almost up here, but is there something that we haven't covered out there that anybody in the crowd would like to ask a question about? We are certainly open. We have a microphone here. I know we have covered a lot of stuff. Maybe we took all of the questions.
It sounds like all of you had a pretty good idea that the market was going to be dropping here come late fall, December timeframe. I'm just curious, because you're all marketing gurus who we look to, were you recommending that we were 90% sold, or were you holding off? And then why not? If you saw this coming so clear, why were
I'll take that fastball first. When we started this, I was bullish last year because the old crop stocks were tight. We should have rallied more than we did. And I think I can say honestly, yeah, we did hit the sell button hard. Easy for me to say, I'm a broker. We just sold the futures 100%. What I hear from everybody is, well, I couldn't sell the cash. I didn't know what crop I had. I have a typical answer for that, and it's not a good one. If you wait until you know you have a crop, take 50 cents off corn and $1 off beans. And we got to get into the market by hitting that futures button. I mean, that's what we're up here for stuff that's not cash delivery. I did do that, but like I said, my mistake was I was sold, and then that head fake in October, oh, that got me. That got me bad. I thought that was the lowest. So I exited all those shorts. Remember, I farmed too, and then wrote it down just like everyone else. So no, we're brokers. We're not right all. If we were right all the time, we probably wouldn't be up here.
We wouldn't be here. No.
Good question.
I guess, I didn't know, I mean, I had the anticipation that we were gonna be selling, sell the market off, but when the drought hit or the dry conditions hit, I think we were sitting in the 30%, 40% price, something like that, and just like everybody else, then stopped until we could see what the crop was, just because, we farm down in the southeast part of North Dakota, and, in July, our wheat was 6 inches tall heading out, and I offered to buy it from my brother, his field, so I could put it up for hay for the cattle. Well, smart of him that he didn't listen to me and he took it to harvest. It was a 50 bushel crop, but that prevented us from doing a lot of marketing. And sad to say, I got caught up in the farmer mentality instead of my mentality, and it convinced me not to do any more pricing. I did not expect this big of a sell-off, because once we turned to January and we saw USDA sandbag us in the January report, that then sent me into a deep depression in the whiskey bottle. So,
All of us, yeah.
Well, and that has been disappointing. I think the market, we've talked about this before, basis levels and what we saw for the spreads and all that for a long time really made us feel like the market price should have been higher than it was, right? Especially on corn when you're down to what, a 1.2 and change ending stocks for last year. That made sense.
Right. I mean, we really didn't see our big ending stocks estimate come until the January report, and then everybody's enthusiasm went out the window.
And who wants to sell at the low? I said that for months. I don't want to sell today.
So for 3 months, we wouldn't sell at the low.
I know. Yeah. Great move, Bosse.
It's true. Yeah.
I think, I talked to not only farmers / commodity brokers from this area, but all over the country. And kind of the theme that I heard this year, you asked, did people predict this? Yeah, I think there were people that I was talking to that were predicting. We talked about it even this summer. There was a commodity reset that was coming, especially going into this year. Timing was a little interesting, and the fact that I did talk to a lot of commodity folks that said they tried to get producers to do sales, and people did not want to do it. And now when I was at Commodity Classic last week, I stopped by enough booths of these IBs that said people were coming by mad because they did not have anybody telling them to sell enough. So it's always hard to discern. Was it they weren't being advised, or was it that farmers weren't doing it? And I don't know. I'm not trying to, pick a fight there or anything, but I'm just saying
A little bit of both.
tough. It's a tough deal.
And from the brokerage standpoint, I think it's been a reality check too, that paper has become a very important tool in your marketing plan. You know, whether options or whatever, there's a lot of different ways to manage risk still and still be able to benefit from market movement one way or another and have yourself protected. So if you don't have a broker, I hope you do find one, because now is the time. It's you know, a really good tool, and start learning and start getting things in place.
Don't you think the other thing too is that there's become a disconnect between fundamentals and what we talked about earlier, which is money flow? And when those don't connect, and there's been a huge disconnect, especially the last 18 months, then it's really hard as a producer when you know that crop isn't there, you know in your gut that, you know, certain fundamentals should be moving the market and they're not. That makes it really hard not to dig in your heels.
It does, and to add on to that, every one of us in here want to trade supply and demand, right? But probably the most important report you see every week is the Commitment to Traders report.
It's starting to be, isn't it? And that's why we say, that's why we talk about how big the outside money and the influence that that is having on these markets, how important it is for you to pay attention to that, not just the supply and demand tables and balance sheets and, you know, watching technicals and charts. Sometimes the charts will
Well,
tell you things in terms of the price action before you know why. Isn't that right?
And especially now with the funds being so short, any rally we have has been unsustained because it's short covering. That's what we've all been hearing over the past couple months. It's just short covering. How do we know it's going to be more than that? That's why we watch resistance levels, moving averages, because if we can start breaking those, it likely means the funds have started to move. So technicals have become an important part here, until we know more about if the funds are changing positions.
So we're standing in between you and a beer, but any more questions?
For Allison, would you talk about the American dollar? How much of an effect do you think that the American dollar is having on our markets?
He said Allison. He said Allison.
Well, actually, the dollar is kind of at a it had been at a very key level, actually, 103.8, 103.7, and it's been just consolidating there, and it was ready for a breakout, and we were all hoping it went to the downside, and guess what? Went to the downside. So it did break out, and that was the old high from 2020, actually. So I do think the dollar is going to play a very important factor. The dollar is going down. I think that helped wheat today, despite the cancellation, is that we are seeing a continued move lower. Hopefully that helps us become a little bit more competitive on the global market. But again, outside market movement is going to also impact the dollar too going forward. And I would say with the break, I'd look for that 102 area next, followed by 100, and fingers crossed we can maybe get to 90 this year. It wouldn't surprise me if inflation comes back by the end of the year.
But it is tied to what the Fed's doing with interest rates and all that. It's all tied together.
Correct. And the feds are meeting here in March, the 19th and 20th. Speculation now is they'll pause rates. I don't think they'll do it in June either. And then after that, you're getting into election cycle. They say it's not political, but it's really hard not to believe it's not, you know? So I don't think we'll necessarily see a play right before elections. So it could be the end of the year before we see anything if they do cut rates. And if inflation does start popping back up, there's nothing saying that they can't raise them either.
The other thing to watch too is if the stock market starts stalling out. You know, there's a lot of money that's gone out of commodities into those markets like the stock market because they go where the money is. If that starts stalling out, is it possible some of that money could come back to the commodity sector, you think?
It's used as a hedge against inflation.
Right.
And like I said, I mean, the last couple of years, that's really helped commodities. So I would say there's a good chance that, again, trend followers. So wherever that next trend is.
I think the biggest concern we've got though, look at what the gold has done. You know,
Yeah,
gold
hit
set
record
a
high.
record high, and you know, in times of uncertainty, people buy things that when they drop on their toe, it hurts. You know, so, you know, with gold going up, that makes you kind of concerned about what we've got coming as far.
And there's a lot of uncertainty in the world. All three of us have talked about the fact that the market, especially wheat, has become numb to the Black Sea and the Red Sea disruptions, you know, the fighting, all of that, right?
Yeah, for now. for now. I think there is concern though. It is going to take a supply shift or some kind, and this is probably why I'm a little bit bullish too, is because I think the countries that are going to be affected the most by the Red Sea, and if there is something more going on in Russia, Ukraine, is East Africa, and Egypt's the biggest importer of wheat on the global market. And if they have to get rerouted and readjusted, it's going to affect the price of wheat.
They just got a big tender here, some help from IMF today, I believe, or yesterday, wasn't it?
Earlier this week,
Earlier this
Egypt
week.
put out a tender, but
Yeah. Okay. Did we have another question over here?
Question, that bio or the diesel plant out in Spearwood, where is that, all that oil is going to Dickinson to get refined in California, is that correct? So then, are you saying that, are they pushing their production, or are they just trying to get, did you say they're trying to get up just to a subsidized level where they'll cut it off?
right now that's where the industry is gonna set at, is where the renewable fuel standard number is at. Because anything over that, they're not gonna get this, not be available for subsidy. So they're gonna slow down their production, the industry as a whole, not just, it won't be individual plants, but we're gonna see a slowdown until the renewable fuel standard starts to increase and show, so that they can get the subsidy.
So where does the one out is in Mapleton or Castle, when that comes on this fall, where's that stuff gonna go? Is that gonna go out to Dickinson then, to it, California?
That's
nobody knows.
we don't know at this point, because they're actually tied into a different oil company that's part of that one, so we don't know where that's gonna go at this point.
So they have told me that they actually have it all allocated. It's already spoken for. I just don't, they
just won't say where,
They just
yeah.
won't say where.
And just take a circle, you take that circle around Fargo, do you think that circle will help our bases up this far? Probably not, huh?
Well, yes and no. It's gonna help basis levels all over, because, North Dakota has 200 million bushels of soybeans that we raise. So we export 140 million of them right now. Well, with these two plants, it's gonna take about 80 to 85 million bushels to operate Spiritwood once it's up and running to a capacity, and then with the one at Castleton. If the one here in Grand Forks gets going, then all of a sudden we go to 140 million bushels that are gonna be crushed. So now, if you leave acres and production static at 200, now all of a sudden we're only exporting 60 to 70 million, and we're no longer dependent on the Pacific Northwest or the export business to China. We are now no more worried about what's going on domestically. So it will help stabilize basis, and you guys are going to hate me to say this, but I'm going to say it anyway. It is not going to lead basis. They are not going to be the market set. They're not going to set the market. They're going to enhance the market a little bit. They'll be there to buy when they need to, but they're not going to go and offer you a 20 better basis than what the elevator is, because what happens if they do? They all of a sudden get all of the beans.
Right.
And they get too much, and now they get overloaded. And then they're gonna have to widen their prices because they need to stop flow. The only way you can entice flow or slow down flow is by price.
Mhm.
So they're not gonna be the leader that has everybody selling to them. They're gonna be just as good as they need to run the plant.
And they're sourcing so much a month between those two plants. They're looking for 200,000 bushels a month between the two. That's a lot of grain. And where they're going to source it from, they're going to need it to keep at full capacity. It's just so.
And
it's
a lot's gonna
change.
come from elevators too.
Yes.
Do you think that, like in Castleton or more, will that oil go to someplace else in the United States rather than California, and same way in Grand Forks? Do you have any idea where that one's going?
We don't know right now. They've got it, like Michelle said, it's allocated someplace, but they're not telling us.
I almost kind of don't care where the oil's going,
Yeah.
as long as they're crushing soybeans, and Aberdeen's another plant that's they're planning on pulling from North
And
Dakota
Mitchell, South
beans as well.
Dakota.
Mitchell, South Dakota is, it's all great. And obviously, long story, we want to get to the aviation fuel.
Yeah.
That's what we want to get to. And I think we will. I think eventually China buys their soybeans from Brazil. We use them all here, like all of them.
Yeah, that's the hope. And, we could spend a whole nother hour talking about sustainable aviation fuel and what it's going to take to get our carbon intensity scores low enough so that, these plants can go and qualify for the credits that are going to be in the Inflation Reduction Act. We're still waiting for the GREET model. They were supposed to release that last Friday. They did not. That will kind of determine if they're going to use, the GREET model. Then soybean oil will qualify for the $1.25, I'm told, subsidy, but ethanol will not. So that means that you either have to be on a carbon pipeline or you have to partner with producers that do climate smart agricultural practices to be able to lower that carbon intensity score enough to qualify on the ethanol side. If you want to qualify for more than the $1.25 per bushel for sustainable aviation fuel with soybean oil, they will have to either do different practices unless they implement the GREET model as it is. But the problem is that when it was released 2 months ago, EPA said, oh, we're going to make a few minor adjustments, which might include land use. And so stories still to be told. But the point I'm making is that this is all very dependent on what biofuels policy is going forward, don't you think?
Yes, most definitely.
And I just got back from Commodity Classic, and we were just talking about all these issues, so I'm sorry if I just trumped all of you
Oh,
talking
no,
about it.
yes.
Perfect.
Because that's
Good
what
job. No,
they
sounded
told me. So.
Back to your basis thing though too, it will improve the basis, but probably not during the time of year you want, not during harvest. Everyone has enough beans then. We're gonna have to learn in the Dakotas to store our beans and wait till next summer, and that's when you'll see the basis increase.
Excellent questions, though. Anybody else have any? Anyone? Like I said, we're standing between you and the bar, obviously. So a couple things that I would just want to mention. First of all, I do markets with a lot of people all over the country, but I think these three sitting right here are some of the best. So you are very lucky and blessed that you have these folks here in your backyard that you can work with as you make marketing decisions, because they're not getting any easier, that's for sure. We are always there to help. I'm doing markets every day on Ag Day TV if you get that, but also subscribe to my podcast because I'm talking to folks like this every day, 3 or 4 times a day. So it's Markets Now with Michelle Rook. It's on Spotify, it's on Farm Journal YouTube, it's on AgWeb, all those places. So follow us there because I'm always talking to these guys, trying to get good information out to you as producers. Also, these guys have commodity newsletters and they go out every morning and they're looking for people that, not just that trade with them, but that will subscribe to their services to get information. And so, talk to these folks after you're done or after we're done here, get their cards and, let them be resources. I'm talking for you and maybe I shouldn't be doing that, but I know these guys well enough to know that they have had manure on their boots and they wanna help you. Am I right?
Not today.
Oh, not today, Allison said.
Yesterday,
Okay, she just doesn't have manure on her boots today. Okay. Well, like I said, DuWayne, Bosse, Bolt Marketing, Randy Martinson, Martinson Ag, and so happy to have you with us this year.
Thank
Allison
you.
Thompson with the Money Farm. Let's give these guys a big, big round of applause. I also want to thank the folks from CHS and one of the big sponsors here has been Mosaic, brought us in to do the roundtable and our coverage. We'll have coverage the next 3 mornings on Ag Day and then on US Farm Report this weekend, so you can catch all that there. But thank you for having us in. Thank you to the 3 of you. Love them to death. And thank you for what you do out in the country as producers. And we hope that you have just a really great 2024 season. Thank you.